Good weekend, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for, and we're actually on Saturday as I'm doing this, July 9th, 2022. This is your weekend edition, so we look at weekly charts. Now, before I get too far, if you're watching me on YouTube, and many of you do, please hit the subscribe button. Helps us, number one. Gives us more viewers, and people like that at YouTube. Number two, you get the video as soon as I post it. A lot of you are not on my mailing list. When I send out the notice to those on my mailing list, they know when it's posted. You don't. Let's get you that way. During this video, at any point, you're able to take your cursor, push it up to the top there, an icon will appear. That's your free offer area for yourself, okay? Just click that, be able to get my research for a 2-week trial free, Linn research, price counts. There's so much that you can do. I think you should take a look at that. So, we had huge jobs data day. The gold was able to hold a gain off it, to my surprise. I didn't expect the jobs numbers to come in the way they did. They blew out every single estimate. What you didn't pay attention to, if you weren't careful, look at how much you're down in the bonds and notes. And the reason is that jobs number is so strong, you've just given the signal to the Fed chair. Mr. Powell, runway clear. 75 points, due east. And that's what he's going to do. He's going to lift the points, not 50. They can go 75 now. The Hawks will win that argument. We have to listen to the press conference, and we get 2 months of more jobs data before the next important FOMC meeting in September. That will determine how much more aggressive they go. Remember, 75, as Mohamed Al-Arian said, is the new 50, and he's right. That is how you have to look at it, and the Fed is not going to sway. They have to beat inflation. More people getting jobs is inflationary, not deflationary. So while commodities have come down, people have enough money, new jobs, or what? They have spending power. The Fed wants to curtail that to a degree. When we look at a monthly chart of gold, I told you might be headed into the under 1,700 level. You certainly look like it on the monthly chart. 1,680 looks like the target. You'd have to get back over this high, which, what was that high? Here we go, 1875.60 on a monthly basis to negate the current downtrend that is in place. When you look at a weekly chart of closes, down another 3%, and boy, this market has just been nosediving. Look at how you've broken into this area. Now, this is a whole support zone. I know I've been pointing that out to you. I've shown you on the daily charts too, that maybe the 1650 on the dailies, and certainly in this one, you're already probing those the supports that were found in prior time. When you come to the weekly chart on the swing line, trend is down. Take a look. Next objective in moving averages, I keep saying to you, 1650. That's the 200-week moving average of closes. You are under the Bollinger Band, and you closed in the bottom quadrant. To get a downside breakout on this chart, you need to make a lower low this week and close again lower and in the bottom quadrant. That would, to me, lock up the 1649.50. Conversely, markets don't like to stay under Bollinger Bands. Therefore, it should try to fight to get back over it. Time and time again, you get to these numbers and you get your spin, but when you had this one, this was not a breakout, by the way. The market pulled back. You wait and you see when it's going to offer. Is there anything bullish on this chart? Absolutely nothing. Slow stochastics down. So trend down, bias down. You're under the Bollinger Band, which means you're not a seller of this market under Bollinger Bands. Gold-silver ratio still playing here on a weekly basis over 90. And silver, trend down, bias down to the lower band, but staying to the right-hand side. Did the market embed? So now we have to take a hard look. And if you look here, let's go one more. Both numbers under 20 the week of the 24th, under 20 the week of the 8th. Follow me? Under 20 this week. Therefore, you have an embedded reading. As long as you don't take out this week's low, I think the pros will sell short at 2048, right at the 200-week, looking for the market to come down. I'm not saying it'll get there, but that's what I think they'd be doing. In copper, this is an area, in my opinion, to cover all shorts. The combination first challenge of a 200-week average and a Bollinger Band together, that's it. Now, Did we have a downside breakout? Yes, you met all the criteria. So, and that's what's dropping the market down to that next number. But as I see it, we're in the major support area. That is not a bull sign. It's a sign not to be short. Platinum, down to the Bollinger Band. Again, give up the short positions. That's my opinion. I think you'll be able to sell the market differently, but I don't like the pattern of a higher high and lower low anyways. And in the dollar index, this is the spot where the pros are going to take profit, in my opinion, against the upper Bollinger Band. It is embedded, and on pullbacks, they'll keep buying it. So far, there's nothing to stop the dollar from gaining on literally everything. Higher interest rates, strong jobs market. Tell me what's so bad about that. Now, we're going to see corporate earnings coming out, so that'll affect the stock market to a degree. Let's see how the corporates do. I would be putting out forward guidances in international corporations saying the dollar's eventually going to hurt us, blah, blah, blah. All that's doing is covering the fact that they're pulling in a lot of money until demand really saps off. Remember, your free offerings, just come up here, give a click. I'm Ira Epstein. You have a great day.